Hello and welcome in from Sunnyvale, California. I'm Mark Vierra and this is my technical analysis video to go along with my weekly trading log, where you can find me here at HotStockMarket.com. Now it's just a basic technical analysis. I'll go over some trend lines and moving averages, take a look at fibs and chart patterns. And of course volume, I think, is probably the most important thing. So let's first start by taking a look at the week that was. Last week I was expecting more downside, and of course I was wrong. Still fighting back for the month of April. We're about 0.5% down for the quarter month, and we're up 2.71% for the week, and we're off almost 2%, 1.71% from 1897 highs. So in this video I'm not making any buying or selling recommendations. Sometimes I'll even go into some trading methodology, but mostly I think it's fun to kind of give a guess on and I say guess because it's an experienced trader knows you don't expect, but you try to suspect. So it's not about being right and wrong. To an experienced trader, it's about minimizing losses and maximizing gains. You think you got a good setup, you don't question it, you get in the trade. If you're wrong, if the trade moves away from you, you start to scale out, or you just get out completely. Where if the trade moves your direction, you scale out, get your principal out, get to zero risk, and you can let remaining shares run free. I think it's a mistake to think it's some Vegas get-rich-quick, going to make $1 million off of this certain technical oscillator that's going to signal when to buy and sell. This is just ridiculous, And the ancient Chinese philosopher, which still wisdom holds true today, Lao Tzu says, "Those who speak don't know. Those who know don't speak." So if I've got something that's going to make me $1 million in the stock market, it would be just stupid to go on the internet shouting it from the highest mountaintops where it's sure to stop working. You're going to trade it and make $1 million. So it's not about being right and wrong, folks. But I think it's fun to take a look at technical analysis and give a guess on where I think the markets were heading. Now, last week I thought we'd get this ABC correction, little measured move lower, but it was quickly bought up, and the technical analysis and the charts will give us a little more insight on not what to expect, but what I suspect. So let's start off with a monthly chart. Let me cue that up. So I like to start off with long-term charts. This is a monthly chart. These are all monthly candles. This is the SP500. This is the basis of my analysis is on the SP 500, not on the Dow, not on the NASDAQ, but I like the SP 500. Gives me a balance between the riskier or what's considered risky tech sector and the 30 company blue chips on the Dow. So this is what I like to take a look at here and share with you on my trading log and videos. Now, this is some interesting things. If we go back historically, this was started off as being a main trend line here, which we've advanced to a more parabolic trend line. See if I'm catching these lows here. Get this lower wick in here, and I don't want to cross into bodies. That's not how you want to draw a trend line. Very subjective trend lines too. You just work with them and see. The more price is going to react with your trend line, the better that you draw on your trend line. But what I'm seeing in if I go back is we've come down to the major support, and we've been doing these rounding patterns. See, rounded, tag support, and we get up into this more parabolic where we're rounding off a support, and we touch that support, We get these just kind of these rounding maneuvers is what I'm looking at here. Now let's compare that to just the past 4 months. Look at this resistance line right here, just off of these highs. So it's a very systematic upward move. When we come down, we do these rounding patterns off of support and go on to make these higher highs up on resistance. So I think that's interesting. Just something to note. The current monthly is kind of a doji. It's a little bit fatter than a doji, but we tag support, and I'm a halfway candle kind of analyst here, where on the candle I'll look at the full spread and figure, okay, that looks about halfway. So if I'm above halfway, I tend to be bullish, and below halfway means it wasn't quite there, and that would be bearish. So that's just something to note on the monthly chart. Let's queue up the weekly. Just take a wide lens view of where I've got some trend lines drawn, and I've got this blue piercing through price is what I'm calling a pivot. Same thing here with this yellow is, and let's zoom in on that, take a look at that. Now, that yellow trend line, we broke down below it here with this bearish candle, and we pivoted right above, and look where that pivot stabs. Of course, like I said, just halfway, so I'm bullish above and bearish below. And so now we can call this, let me queue up the next chart. I'm just kind of looking at potential ranges in here in between this resistance marker here and the support here. Let me close this. So there's a few things now. I really wanted to zoom in so we could take a look at this tweezer bottom reversal. If you have more pointed, you can go in and call it a piercing. I've heard it called scissor. In any case, what it is you have a bearish candle and then a bullish candle that is over halfway of the previous. And I love these two candle patterns because they're really very reliable at pointing out where buyer response. This is a good base level right in here, just above the 1810, which and I go back to previous tops, okay, and we pivoted above. I think this will be a good near-term support, this previous top, and we came down. We got buyer's response just above this. We can even come in here, to this high, and so tops become bottoms, bottoms become tops. That's just a basic, basic thing. What else do I want to say is you can almost kind of say that we've produced this downward sloping channel. See how that works out. Now, I'm not saying that price can't get below this, but I would be surprised. I think if we did come down to test these levels, we would see similar responsive buying down here at the 1820 area. So this is an intermediate term. This is a weekly chart. Got some, another chart pattern. We can take a look at that. So the only real weekly chart pattern that I'm paying attention to, and I've had this drawn for quite some time, is this is a weekly measured move up. I'm calling this a primary leg. Now within the main legs, you'll see these ABC corrections as part of the leg, and then you'll have a major corrective phase. And then now if I measure this distance here to this distance here, and I add it from here, that gives me the final leg. And it's very common to see these ABCs within the main legs. So that is something that I'm noting. Whoa. All right, getting into weekly fib extension. Same area from my measured move from the low to this high, and I'm marking in this as the retracement, and this is our extension off of that. Half of that leg would be right here, and I always say how this 50% is a very important area, and we broke below that and back above, and now I believe that this would be a good support area here at 1839, and getting into 50% retracement. Let's take a look. Now this is a Fibonacci retracement from the latest low here to the current high, and where do we bounce off of? Of course, at 50% at the 1817. That's, you know, Fibonacci numbers. Anyway, not really that big on Fibonacci's or even moving averages, but I think it's good to pay attention to that stuff. Okay, wide lens view of the daily trend channel. Just showing you how far back I've gone with these trend lines, and then we'll zoom in, take a look at closer view here. So let's see, what do I have in here? I'm marking this out as a range. These are pivotal lines that I've drawn in here diagonally, and then now horizontally here, going back to these previous tops, okay, and coinciding with that, I would call that a main pivot. Now we had just a falling wedge type pattern, which we broke that right here at that main pivot. So I think that will be a good sign of support here in this area. And then the upper part of the range I'm getting, you know, from this this diagonal pivot where I see a lot of price reaction. So where I see price reacts to a trend line, the more power I think that trend line has. And that's just where I'm marking out a range for the week. Not saying it has to do that, but that's just my guess. Let's clear out of that. What else? Where are we going here? Oh, you know what? Andrew's pitchfork. I went in and redrew this to some better key areas here. I was taking a more of a horizontal view, and lo and behold, I got it a really good support using from this low to this high. So whether this 1890 turns out to be you know, a good spot for resistance is yet to be seen, but I do believe that would put in another double top. You know, I think it's going to be a tough, you know, 1890 is going to be a tough area to get above. Let's take a look at, so you got our near-term moving averages here. You know, where prices is above the 20-day moving average. Our 5-day moving average is rising, and that's all I'm looking at. Really not seeing too much there. But what I do find interesting is the 120-day moving average. Just going back historically, every time prices come into contact with that level, and you see, you know, what's been happening here. We go to the top of the Bollinger Band. So we hit that. Here we broke below that, and price came back to the top of the Bollinger Band. I think that's what it's doing here. We saw the buying action coming in. Now, I'm not saying we won't do some consolidation. We'll look at volume, but I do believe, if not this week, we will be seeing the top of this Bollinger Band again at that 1890 level. And I'm not playing into moving averages as dictating where the market's going, just using that as a landmark reference. So we got similar things on the weekly Fibonacci that I do have on the daily. So on the daily Fibonacci extension, I'm coming down to this February 3rd low, and I'm going to a recent high, and here is the corrective leg. So if we add the distance between this and and this spot here to this is how we get our extension numbers. Half that leg would be right here, and that is 1880. I think we will see price reaction at that 50%. That's just kind of a weird thing, the way these fib numbers work, is that 50% number often comes in, where price will react, at that level. And similar to the weekly, let's open this up. From the low, this is pretty much the same thing as that weekly Fibonacci retracement, is from the same low to the same high, but on a daily you can just see how price has reacted. 23 had been a really pivotal. You can see where price is breaking above and below that. We found some support at 38, and we just dumped right down again to that 50% level at 1817. So same thing as the weekly, just kind of seeing more daily bars in there, see where price has reacted. Now let's see, chart patterns. Now I don't have a lot of, not a lot of chart patterns. You can see how price has doing this broadening. Okay, I think of a broadening more of a bullish pattern than I do bearish. It's kind of random, but tweezer bottom reversal down here off of this trend line. Of course, that's what created this trend line. Looking at, to get a better view of our previous top here, became a nice pivot. We gapped, in that previous top area, and we got support off of this previous top. So, looking at previous top supports, what else am I seeing here? Let's see. We did this measured move, okay, measured move lower. Last week I thought we would get resistance off of this previous top here. I thought we would, maybe come down lower. That didn't work out. So not much for chart patterns. What I did find is a long-term bearish pattern called the wolf wave. This is really an obscure pattern. Not too many people know about this, but you have a bullish and a bearish wolf wave. So now if your trend lines, if your support trend lines are moving upward, it's a bearish. Now if we had drawn these where it was down sloping, it's bullish. And it's an interesting pattern where you got one is marked at the beginning of the trend. This is 2, goes up to 3, comes down to 4, and then there's a 5 there. The pattern says that you want to buy or sell at the 5 marker, and the theory is that if you cross between 1 and 4 and you go as far as where these two lines meet, that's your estimated time of arrival and your estimated price. Let's see, somewhere 9.8. So we'll see in September if we get to, we test an 1870. I don't think that's outlandish. It's very possible to test the 1870, but that's the only daily chart pattern that I really came up with this week. Not much for chart patterns, and that's kind of a silly one, but it's fun, I think, keeping track of chart patterns. So, okay, all that stuff is just really kind of just background information. This is where things really start to get interesting, is when you start analyzing volume. With this is these bars here. This is volume by price, as opposed to volume by time down here. And this is where I start getting really bullish here, is when I start seeing stuff in volume. So let's take a look. I still have this, where the falling wedge where we broke out. We did a nice gap pivot above that. I think that could be an important area for price. But let's look at this Tuesday's candle here, this long lower shadow. Oh my goodness, this right here is the singular telling of and we did that on. So if I come down, that's above average volume that we did that on. It's maybe not necessarily climax volume. So okay, so I'm not bullish to an extreme extent. But this is just a lovely candle right here. This is a very bullish candle, and of course we gapped above that pivot, and that's a trend candle. That is pointing to, I think, is what we'll see, bullish price action coming up from that that observation right there. You can also see how the point of control was also acting as a pivot. In that point of control where most shares are changing hands, you've got kind of two schools of thought where it's like you're selling a car, and I think I sold it, I got a good price for my car. The guy that I sold it to thinks, yeah, I got a decent deal for this car. Where, when two parties think they got over and they got the better deal, that's always the best transaction. And that's sort of what's going on at the point of control. You can say that's the point of agreement, or you can say, no, that's where most people are disagreeing. In any case, you want to just think, mean reversion is your high volume nodes, your point of controls. I just think mean reversion. I think, we're going to see price head up towards this value area. You'll probably start losing some demand at that area of value. Of course, we came all the way up. There's our profile boundary. And what else can I say? This is just a daily volume chart. It's kind of just your basic volume. And I've got all these little dots and stuff. This is volume spread analysis for dummy study that I've got, which you can find. I've got links to that stuff in my bottom part of my trading log. So now I like to look at monkey bars, and what I like to notice is the relationship of where the TPO, this is the highest amount of volume within this shaded area. This is the playground where 70% of the trading activity is taking place, and this is where the most volume is. And the two things that stand out for me is that price right now is not outside of the playground, so that means it's not at an excessive level, and the TPO is at the upper portion of the playground. And I think that's important things to note. Now let's get into a composite profile. Now in composite profiles, you have where the initial balance, this is where trading started the month. And I think it's important to notice the relationship between where the TPO is to the initial balance. Okay, not so much on the monthly, but when you're looking at daily composites too, it can almost be an arrow pointing to where price wants to go. In this case, for the monthly longer term composite, I see that we're kind of missing a little volume here in this bell curve. I think that will be a good spot to see where price is going to find resistance. We'll probably see the playground expand to this area possibly. Could see the TPO moving up, point of control moving up. But we'll see. Not so much at the monthly composite, but let's take a look at the weekly. This composite is this is what we had for our 4-day week. All right. Now the relationship. Okay, here's the initial balance. Okay, price is way up here outside of the playground. So on a shorter term time frame, I'm going to say that we're getting close to a value area. That leads me to believe that we probably see some initial consolidation lower. Now, I've been wrong before about price going down, but it is a healthy thing to see some consolidation before price goes on to make all-time highs. But the interesting thing to note here for the week is our TPO is at the upper end of the initial balance. So, and of course price ended up way up here. So that's something to pay attention to if you're looking at composite profiles and you want to check these out. There's all kinds of things, your playground area where most of the trading is taking place, 70% wise. This is a 10-day hourly, so this point of control is the highest volume on this time period of 10 days, right here at 185. And then your TPO, time price opportunity, is the highest amount of trading volume within this square shaded playground area. So there's all kinds of things to analyze, and you get these bell curves showing you the structure of volume, and you see these little single prints in here. There's fancy terms for it, liquidation break, whatever. I like to think of it in terms of market speed. The liquidation break is just a fancy way of saying the market sped up. Okay, it moved faster in this certain direction. And I think that gives you a better understanding of how to analyze composite profiles. That's my opinion. Now, let's get into some risk. We see a lower VIX. Just take a look at the VIX. Getting down to some lower levels in the VIX. That's another argument in favor of a little bit of consolidation before a move higher. I am bullish for the week. In case I haven't mentioned that, I am bullish for the week. U.S. Treasuries, we put in a huge engulfing this previous candle here, and on the surface that's bearish. But now here's our previous top trend line too that we had buying response out of, and I am seeing I'm still kind of bullish on U.S. Treasuries. I think might want to come back down to this previous top area. So a break below this, I think we might see lower U.S. Treasuries, but ultimately the overall impression I get is I'm bullish on U.S. Treasuries. I think that liquidity is moving into these risk-off, safe haven areas, because of global tensions and all that. And yet we still see money flowing into stocks too. So, and another interesting, I'll get into the U.S. dollar next here, but this is above average volume. So I think we'll see a little consolidation in U.S. Treasuries, but I'm still overall bullish. I want to take a look at, let's see, quick look at the yield, still in this falling wedge. I do think the lower yield goes, the more attractive stocks look. I've been saying that for quite some time. But now, what's interesting about the U.S. dollar is it's seems to be breaking away from the typical inverse correlation to the stock market. And that's, a lot of reasons for that. I've explained my whole thesis on that, but I won't get into it. I'm seeing a bull flag here. All right. So, U.S. dollar has moved up, done a little bit of consolidation, and I do think we will see a higher U.S. dollar. The other thing I'm also noticing that it's sort of been, the moves on the U.S. dollar have been preceding the moves on the SP 500. So whether or not it's a bellwether for the S&P, I'm not exactly saying that, but I do like the way that it's moving with the stock market. That's the way it should be. The U.S. dollar, good news in the economy should be good news for the U.S. dollar and not excuse me, have the opposite effect. So before I close the U.S. dollar chart, we just I like this lower support here where it did a test of supply. Okay, we tested supply down here, Now, the next candle will actually be a confirmation to that test, but since it closed, again, halfway above that marker, leaves me to believe that the US dollar is still bullish. Now, that supply test was on low volume, too. So it wasn't a really big supply test. But with a bull flag in the background, I tend to think that the US dollar will move upward this week. And conversely, conversely, the euro is looking bearish to me. You have this is a gravestone type of doji candle on low volume down here. You know, I'm not seeing any kind of sell climax volume, so I don't think we're going to see any big moves. More like we'll see some sideways consolidation. I am still intermediate term. I do still believe that the euro has got more headway up here to make. You know, I think, let's see, I am a little bit late on this video. I think the Forex market has already opened up. So, yeah, the euro's opened up slightly higher, $1.3816. But this is looking kind of bearish to me. I almost think since there's low volume, we'll probably just see a sideways correction in time, consolidation-wise. But I do believe that we will see a higher euro. And that's it. I think that is a video. Of course, you know, you can find me at HotStockMarket.com. You can check out my weekly trading log. I'll have all these images and more up here soon. Going down below here, you can see have links. You know, there's TOS scripts if you want to see kind of the studies that I'm looking at, and mention Reddit subreddit. StockMarket is a great place to have discussion and find information on what you know, people are trading and talking about in the stock market. So that's all I got this week. Yeah, just close out this video with you know, it's technical analysis. I love to analyze the stock charts, but it's not about being right or wrong, really. It's you know, it's not so important how much you make when you're right, it's how much you lose when you're wrong. So I'll just leave you with that note, and I will see you on the boards.